Realty Income, ticker symbol O, is one of the most iconic dividend-paying stocks in the market. Known as the Monthly Dividend Company, Realty Income is a real estate investment trust, or REIT, that specializes in generating consistent rental income from over 13,000 properties spread across all 50 U.S. states and multiple international locations, including the United Kingdom and Spain. Realty Income focuses on single-tenant, freestanding commercial properties subject to long-term net leases. This means the tenant, not Realty Income, is responsible for property expenses like taxes, insurance, and maintenance, making the income stream more stable and predictable. Now let's break it down by category. First is the payout tracker. Realty Income pays a monthly dividend, which is one of the most attractive features for income-focused investors. As of July 2025, the dividend is 25 cents per share per month, or $3 annually. The yield sits between 5.4% and 5.7%, depending on the share price. Realty Income has increased its dividend more than 100 times since becoming publicly listed in 1994 and has paid dividends for over 630 consecutive months. That is over 50 years of consistent income. On top of that, it is a dividend aristocrat and a dividend king, meaning it has raised its dividend every single year for more than 25 and 50 years respectively. Next is the income table. If you own 100 shares, you will receive $25 per month or $300 per year. 500 shares gets you $125 per month or $1,500 annually. 1,000 shares earns $250 per month or $3,000 a year. The dividend is as predictable as it gets, making it easy to budget for monthly income. Now let's talk about the net asset value and price. O has historically traded in the $60 to $70 range, but recent interest rate hikes have brought it down closer to $53 to $56 as of mid-2025. REITs are interest rate sensitive, and when rates rise, their valuations tend to fall. However, this may present a buying opportunity for long-term investors who believe rates will stabilize or fall in the next 1 to 2 years. Despite the lower price, Realty Income's real estate portfolio is still generating strong cash flow, and the dividend remains covered by adjusted funds from operations, or AFFO. Let's compare it to another real estate option. If you are looking for stability in commercial real estate, Realty Income is considered the gold standard. But how does it compare to other REITs like Simon Property Group, ticker SPG, or Vici Properties, ticker Vici? SPG offers exposure to malls and retail spaces and pays a higher dividend yield around 6.5%, but has less consistency in its dividend increases. Vici focuses on casino properties and has been aggressively growing, but it is younger and less proven. Realty Income remains the king of monthly dividends due to its diversification, tenant quality, and long track record. Now let's talk volatility. Realty Income is not a high-growth stock, and its beta is around 0.6, meaning it is less volatile than the overall market. This makes it attractive to conservative investors who want to reduce portfolio swings. It does not surge in bull markets, but it also tends to hold up better in bear markets. What about risk and sustainability? Realty Income's largest tenants include Walmart, Dollar General, CVS, Walgreens, and FedEx, which are all considered recession-resistant businesses. The average lease term is over 9 years, and occupancy rates have consistently stayed above 98%. The payout ratio is about 75% of adjusted funds from operations, which is healthy for a REIT. Realty Income maintains an A- credit rating and has access to low-cost capital when needed. It is well positioned to handle rising rates, market slowdowns, or tenant challenges. That brings us to exit strategy. O is not a stock you typically swing trade or flip. It is a long-term core holding for income portfolios, dividend growth investors, and retirement accounts. If you are looking to exit, consider doing so only if the yield drops below 4%, which would signal overvaluation, or if you believe interest rates will rise aggressively and stay elevated for years. Otherwise, this is a sleep well at night stock that continues to pay investors every single month. Now for my meter rating. Income, 9 out of 10. Monthly dividends with consistent growth make it one of the top passive income choices in the market. Risk, 4 out of 10. While interest rate sensitivity is real, the tenant base and financials make this one of the safest REITs. Sustainability, 9 out of 10. A 50-year dividend streak, triple net lease model, and global expansion all support long-term strength. Upside potential, 6 out of 10. There is limited explosive growth, but if rates fall, the stock could climb back towards $65 to $70. Ease of ownership, 10 out of 10. You can set it, forget it, and still get paid every single month. Final total rating, 9 out of 10. Realty Income is a fortress of monthly cash flow. Whether you are just starting out or you are in retirement, O provides steady income, low drama, and long-term security. It is not exciting, but it is reliable, and in investing, reliability pays. If you have any videos you'd like me to cover, say it in the comments below and I will break it down in plain English.